In 2007, Warren Buffett made a bet with his secretary, not about stock picks, not about the future of Berkshire Hathaway. He bet that she paid a higher tax rate than he did. She won. One of the richest men on the planet, sitting on tens of billions of dollars, was paying a lower percentage of his income in taxes than the person who scheduled his meetings, and he admitted it publicly, not as a confession, as a case study. This isn't a story about corruption or tax evasion. It's about something far more unsettling. The system is working exactly as designed. Right now, someone working a $70,000 a year job in America hands over around 22% of their income to the federal government before they even see the money. Automatic withholding, non-negotiable. Meanwhile, the 400 wealthiest Americans paid an average federal tax rate of just over 8% between 2010 and 2018, according to a White House analysis. 8%. Not because they're cheating, because they're playing a completely different game, with different rules, different scorekeepers, and a referee who doesn't show up. You've probably heard the phrase, "the rich don't pay their fair share," so many times it's lost all meaning. But the mechanics of how this actually happens step by step, line by line, almost never get explained. Because once you see it, you can't unsee it. So let's walk through it. Here's the first thing you need to understand. The tax system you're familiar with, the one that takes a cut every time you get paid, is built around something called income. You work, you earn, you get taxed. Simple. But billionaires don't get rich from paychecks. Jeff Bezos' salary at Amazon was $81,000 a year. Elon Musk has taken zero salary from Tesla in recent years. Mark Zuckerberg pays himself $1 annually. So where does the money come from? Wealth. Specifically, assets that grow in value, stocks, real estate, art, companies. Things that sit there, appreciating, without triggering a single tax event, because in the United States, you're only taxed on gains when you sell. This is called unrealized gains, and it's the first crack in the foundation. Let's say you bought Amazon stock in 2010 for $10 a share. Today it's worth around $200. You just made 19 times your money. But unless you sell, the IRS pretends that gain doesn't exist. For you, that might mean a few $1,000s in untaxed paper profits. For Bezos, it meant watching his net worth climb by $70 billion in a single year, 2020, while reporting just $4.2 billion in actual income. And even that income was mostly from stock he sold strategically, not from working. Unrealized gains don't show up on a tax return. They don't count as income. They're invisible. And that's just the beginning. So how do billionaires actually spend money if they're not selling assets and paying taxes? They borrow against them. This is the core of the strategy. 3 words that explain the entire illusion. Buy, borrow, die. Step 1. Buy assets that grow in value. Stocks in your own company work great for this. Step 2. Instead of selling those assets and paying capital gains tax, currently 20% at the federal level, you go to a private bank and take out a loan using the assets as collateral. Let's say you own $1 billion in stock. You walk into Goldman Sachs and say, "I'd like a $100 million loan." They say, "Sure, we'll charge you 2% interest annually." Because you're not a risk. You're a billionaire with collateral. Now here's the magic. Loans aren't taxable. You just accessed $100 million in cash without selling a single share, without triggering a capital gain, without paying a dime to the IRS. You spend that money on houses, jets, whatever. And because the interest on the loan is often tax deductible, you actually reduce your taxable income while living like royalty. Meanwhile, your stock keeps growing. So even after paying 2% interest, you're still getting richer. The asset appreciates faster than the debt costs you. And when you die? Step 3. Your heirs inherit the assets at their current market value. This is called a step up in basis. All those unrealized gains, decades of growth, are wiped clean for tax purposes. If your kids sell the stock the next day, they owe nothing. The gain disappears. The loan gets paid off from the estate, and the cycle starts again. Buy, borrow, die. It's not a loophole. It's the blueprint. ProPublica analyzed IRS data on the 25 richest Americans between 2014 and 2018. Their total wealth grew by $401 billion during that period. They paid $13 billion in federal income taxes. That's a true tax rate of 3.4%. For context, a married couple earning $70,000 a year pays around $8,000 in federal income tax. That's roughly 11%, more than 3 times the rate paid by the wealthiest people in the country. Elon Musk paid 0 federal income tax in 2018. So did Jeff Bezos in 2007 and 2011. Not because they evaded taxes, because in those years, their reportable income was low enough or their deductions high enough that they owed nothing. Musk even claimed a child tax credit one year, a benefit designed to help working families. The absurdity isn't the exception. It's the system operating at peak efficiency. You pay taxes when you earn. They pay taxes if they feel like selling. You can't borrow against your future paycheck at 1% interest and call it tax-free income. They can borrow against assets indefinitely. You get audited if you mess up a deduction on your return. The IRS audits people earning less than $25,000 a year at nearly the same rate as those earning $500,000 or more. Because poor people are easier to audit. Their returns are simpler. It takes less time. Auditing a billionaire requires specialized agents, years of work, and legal battles that often end in settlements for pennies on the dollar. So the IRS goes after the low-hanging fruit. In 2021, the agency had nearly 80,000 employees. Fewer than 2,000 of them were trained to audit the ultra-wealthy. The game isn't rigged in some shadowy backroom deal. It's rigged in plain sight, written into the tax code, and defended by armies of accountants and lobbyists who make sure it stays that way. Here's what makes this so strange. None of this is illegal. None of it requires offshore accounts or secret meetings. It's just tax planning. Aggressive, yes, but perfectly legal. The people doing it aren't villains. They're rational actors responding to incentives. If the system allows you to borrow against billions tax-free, why wouldn't you? But rational for the individual doesn't mean rational for the whole. Between 2000 and 2018, the 400 wealthiest American families saw their wealth grow by more than 400%. During that same period, their effective tax rate dropped from 29% to just over 23%. More wealth, less tax. And while that's happening, the government is running trillion-dollar deficits. Bridges are crumbling. Public schools are underfunded. Healthcare costs are swallowing family budgets. Meanwhile, we argue over whether someone making $50,000 a year should pay a little more or a little less. The real money isn't on the W-2. It's in the unrealized gains, the borrowed liquidity, the stepped-up basis. And none of that shows up in the national conversation about fairness or taxes because most people don't even know it exists. So what do you do about it? Some economists propose taxing unrealized gains above a certain threshold. Others suggest eliminating the step-up in basis. A few push for wealth taxes based on net worth, not income. Each solution has problems: valuation issues, enforcement nightmares, constitutional questions. And behind each proposal is an army of lawyers and lobbyists making sure it never becomes law. Because here's the truth nobody wants to say out loud. The system isn't broken. It's just not built for you. Warren Buffett's secretary didn't lose that bet by accident. She lost it because the tax code treats wealth and labor as fundamentally different things, and only one of them has to pay up front. You can argue whether that's fair, but you can't argue that it's not intentional. The question isn't whether billionaires are paying their fair share. It's whether we're ever going to agree on what fair actually means.